Hi, and welcome to the Market Week in Review for the week ending April 4th. My name's Alex Kuzley. I'm the Senior Investment Strategist for Asia Pacific. And look, there's really only one topic to talk about this week, and it's about Liberation Day. So President Trump's reciprocal tariff announcement that happened on Wednesday, US time. What we have seen since that announcement is equities selling off on the back of, effectively, this is increasing the recession risk in the United States. We think it's closer to a 50-50 or a coin toss right now because the increase in the effective tariff rate is about 14 percentage points, which is higher than we had expected and is a really high increase in that tariff rate on a historical basis. There's a couple of key takeaways or key things that we saw. The first is that Asia was targeted more aggressively than the rest of the world, and that included Japan, South Korea, and Taiwan. The second, as I mentioned, is that tariff rates, the recession risk has risen on the back of this. And the third is that we are still yet to see how countries will respond. We've seen some nations, particularly in Asia, that have already come out ahead of it and said we'll look to lower tariffs. So Vietnam is one of the more prominent examples, but Japan and South Korea have also suggested they're more in a negotiating stance. The two that we haven't heard from in a great deal is the European Union and China. China did say that they think that they're going to come back with some measures, but we haven't seen the detail of those. From a markets perspective, we saw US equities fall 4.5% on Thursday's trade. And we saw non-US markets also fall, but by a lesser extent. And then in US rates, we saw a pretty aggressive rally in US 10-year and US 2-year. When we look at the 10-year yield, though, or fixed income in general, as recession risk has been increasing on the back of this, we do think that, one, the scope for more Fed cuts through the rest of the year has increased. And secondly, that those after those rallies, we still see that treasuries look close to fair value and on the shorter end still look a little bit attractive in terms of valuation. So, we've seen outperformance of treasuries, but because of this elevated recession risk or rising recession risk, those fair value estimates have also kind of moved in line. And then the final one that we've seen that's been a continuation of a general trend, but is a little bit strange in the backdrop of recession risk rising, is that the US dollar continued to sell off. And so we saw a barbell approach almost of the euro doing quite well on Thursday, as well as the typical safe haven currencies of the yen and the Swiss franc. So that's really where we are. In terms of the fundamental data that we got this week, we saw the ADP employment report looked okay. We'll get the payrolls on Friday, and that will be very closely watched. We saw the ISM surveys generally softer than we had expected, or that many had expected. And then we also saw jobless claims, which looked a little bit healthier. So, we're still seeing that generally the consumer has been behaving in a decent manner. We haven't seen that soft confidence flow through to softer spending, but with these tariffs and the impact that has on real income growth, that is going to be a headwind to consumer spending moving forward. And that plus the uncertainty that is coming from this and the potential change to capex plans is really what is driving a higher recession risk than we had coming into the week. Finally, on our sentiment measures, so we talk a lot at Russell about cycle value sentiment. The cycle has deteriorated a bit on the announcement. Our sentiment measure for US equities is currently in the pessimism and heading towards panic. We haven't reached that wholesale panic moment, which we tend to think of as an attractive opportunity to, for forward returns for equities. We haven't reached that point, but we are certainly pretty firmly in the pessimism stage of our cycle sentiment indicator right now. So there's a lot going on. Hopefully that gives you a good sense of how we're thinking about things, and we'll be in touch very shortly. Thanks for listening.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.